AMD stands at the forefront of AI computing and connectivity, driven by its four core business segments: data center, client, gaming, and embedded. In this video, we'll evaluate how these divisions, powered by innovations such as the MI355X AI GPU, positions AMD to challenge NVIDIA in the $200 billion or so AI market, and potentially redefine its stock trajectory for 2025. Starting with their first segment, data center. Why is data center AMD's growth engine? Well, data center led with $12.6 billion back in 2024, which was a 94% surge from the year before, at $6.5 billion. This segment focuses on CPUs such as EPYC processors and GPUs such as Instinct accelerators, including MI300. These are powering cloud and AI for Microsoft Azure, AWS of Amazon, and Meta. A key innovation here is AMD's chiplet strategy. Think of it as assembling a chip from specialized Lego blocks. Instead of one large expensive chip, AMD combines smaller chiplets, enhancing performance, reducing cost, and accelerating R&D and production. This approach delivers optimized solutions for AI and cloud workloads, positioning AMD to compete fiercely with Intel in the CPU market and NVIDIA in the GPU. As demand for AI escalates, data center is essentially driving the growth of AMD's company's trajectory and potentially stock price. Going to their second biggest segment, the client business. Client generated $7.1 billion in 2024, which was up 52% from $4.7 billion a year prior. Ryzen processors fuel premium laptops from HP, Lenovo, and recently even Dell. The AI-enabled Ryzen chips is driving a PC market rebound, steadily capturing share from Intel, especially based on the additional AI capability. Going to their third segment, the gaming. The question is, what is next for AMD's gaming legacy? We can see that gaming contributed $2.6 billion roughly in 2024. This was actually down 58% from the $6.2 or so billion back in the year prior, partly due to the console cycle declines. Especially recently, we can also see that the launch of the 9070 XT RDNA 4 gaming GPU seems to be met with enthusiasm in the gaming community. The last segment is AMD's embedded segment. Embedded delivered $3.6 billion in 2024, down 33% from $5.3 billion the year prior. They acquired Xilinx, and actually acquired through Xilinx, it powers adaptive chips like the Versal series used in the 5G networks, automotive systems, and even SpaceX's satellite and rocket technology for real-time data processing. High margins and long-term contracts ensure stability in this segment, with growth tied to connected technologies like autonomous vehicles. So what do AMD's financial reveal about its future? We can see that in 2023, AMD reported $22.7 billion in revenue, $855 or so million in net income, and 0.53 cents of EPS. In 2024, revenue grew by $13.7 billion to $25.8 billion. Net income surged 92% to $1.6 billion, and earnings per share reached around roughly $1. Data center was $5 billion from AI GPUs essentially. Remember that MI300 was the fastest ramping AMD chip in their history. Analysts project that also going into 2025, they're expecting to have an estimate of roughly 4.5 earnings per share. Analysts also expect that MI355X will drive much higher margin compared to, for example, gaming, which probably is in the around high 20s and low 30s, although these are estimates. And the question is, could AMD hit a historic milestone in 2025, or maybe even a first ever quarter exceeding $10 billion in revenue? I would say that is possible probably for Q3 of this year, potentially Q4, propelled by data center momentum, and if achieved, and assuming let's say 54% non-GAAP margin, a $10 billion or so quarter could probably yield us roughly $2.7 billion in non-GAAP net income. That would translate to earnings per share of around 1.65, which is nearly 50% above 2024's Q4, which was the year high at $1.09. Question is then, is there a reason to be optimistic about AMD? So the question is, can MI355X redefine AI computing? This chip is set for late 2025, and MI355X is AMD's bold AI play. Unlike the previous first generation MI300, which balanced high performance computing, HPC, and AI, MI355X prioritizes AI. Why does this matter? HPC and AI are opposing needs. HPC used for simulations like climate modeling demands 64-bit precision for exact results. Think of scientists perfecting calculations. AI inference, however, powering chatbots or analysts, values speed using 4 or 8-bit math to process fast and vast datasets rapidly. Optimizing for HPC slows AI. Focusing on AI sacrifices HPC accuracy. MI300 was versatile. MI355X is purpose-built for AI inference surge. That's the big difference. So what are the technical advantages of MI355X? Built on CDNA4, AMD's next-generation architecture for AI, this chip offers 288 GB of HBM3E memory and delivers up to 35x better inference than the previous generations, rivaling NVIDIA's H100 and probably Blackwell series. Ideal for cloud providers scaling AI. With 60% or so margins, it's profit driver. One challenge could be connecting thousands of GPUs for large-scale AI. Remember that NVIDIA's NVLink is still the leader, but AMD's Infinity Fabric and Ultra Ethernet consortium, including rivals such as Intel and Broadcom, are helping AMD gaining ground. Success here could unlock 10,000 or more GPU clusters, something that NVIDIA currently can offer quite well. Could AMD then claim a 20 billion AI slice for themselves? Well, AMD's AI revenue reached 5 billion or so in 2024, mostly from MI300. Remember, that was the fastest ever ramping AMD chip ever in their history. MI355X could drive 7 billion in 2025, possibly more. I would suggest that it's realistic that it's gonna get 8 to 9 even. The AI GPU market is forecast to grow from 45 billion or so to 200 billion by 2030. A 10% share, which is 20 billion, is achievable in my mind. Backed by deals like Oracle's rumored 30,000 MI355X GPUs, partnerships with Microsoft and Amazon's AWS favor AMD's open source ROCm over NVIDIA's locked-in CUDA. This would position AMD as a clear second player in the cost-sensitive AI inference. Now, what could derail this positive AMD outcome and rise? NVIDIA's CUDA remains the developer standard, with ROCm from AMD trailing in adoption. GPU connectivity for massive clusters needs refinement. Supply chain delays or gaming and embedded softness could pressure profits. External risks then, like tariffs or tech slowdown, might potentially also affect the company's stock price. Currently sitting at a PE ratio of roughly 20 or between 20 and 25 compared to slightly higher PE ratios of NVIDIA, this suggests a compelling value in my opinion. The stock price of roughly 90 or so US dollar, AMD is down more than 60% compared to the peaks of March or April of 2024. Analysts rate it quite strongly like a buy, targeting roughly 160 or so US dollar, which represent 70% upside. If MI355X and the entire data center business is continuing to driving growth, supported by client gaming and also embedded, things could look great for AMD. If they manage to capture AI market share, revenue could double by 2030, if not more, and sooner than that. So thank you for watching. If you found this insightful, hit the like and subscribe and follow me on X at Your Average Investor. Until next time.